Wilfred. If it, like Mike says, I don't know if it's enough or not, but I think there's going to be a pretty big buy in the dip, though, out there. You know, coming up into this big rally off the lows in March, there's a lot of portfolios out there, I think, that are underweighted and have been underweighted, and they were waiting for an opportunity maybe to reduce their bearish bets. And so I think if we get a pullback at all, we might see, some buy in the dip. I think it's also interesting that this is hitting, as Mike said, it's hitting the biggest cap names that made up a really large portion of the market. And, you know, if someone decides I'm going to sell Apple, they got a huge amount of their portfolio they now have to redeploy. And that might be why we're seeing the rest of the market, both yesterday and today, the broader market, doing much better, as well as the concentrated tech comms doing worse, because we're selling really large cap positions and spreading it over a much bigger part of the market. So it could certainly go lower, but I think there's going to be a bigger buy the dip if it comes next week or the week after. I think it's going to be fairly solid.
Mark, what do you think about the selling this week, and what are you telling your clients to do?
Well, the election's in November, and you're going to continue to see this volatility over and over again, I think, until the election. You're seeing that we almost lost 1 million jobs. We gained 1 million, but if you look at the numbers, almost a quarter of those jobs that we gained are government jobs that are temporary through the U.S. Census program, almost 200,000 jobs. And then the other 100,000 is just local municipalities hiring folks. So we're pretty much flat, with the good news and the bad news. And I think what everyone's waiting to see is who's going to be, in the White House come January 2021. And that's going to determine a lot on how investors see the outlook going forward.